traders at Access Bank expect the current selective buying to persist in the bond markets, given improved system liquidity. For the T-bill side, they're also seeing pockets of demand for short to mid-dated maturities and long-dated OMO papers. Meanwhile, Nigeria's National Economic Council has announced a program which mandates individuals to deposit dollar bills held outside the formal banking system within a 9-month window. Odinaka Linus-Nwonkokwo, the Treasury Team Member at Access Bank, joins me now for more market movements. Thank you so much for your time today, Linus. And let me start with the latter part of my introduction there, the move by the National Economic Council there. How do you think this will impact the demand and supply dynamics in the FX market, especially that 9-month window and beyond?
Hi, so what you can see is that they are trying to be able to formalize legitimate foreign currencies that are outside the banking industry to be able to come into the banking industry. And this is to actually allow the fiscal side and also the monetary side to be able to plan properly. Reading that document, you will also see that they explain some of the benefits to their idea, which includes they are going to give tax incentives to people who are able to take advantage of this, and also they mentioned about unrestricted repatriation, so you can take out money at any time. There's an issue of confidentiality at which information from the individuals will not really be given out, and also they spoke about protection of assets from seizure and forfeiture. So what you can clearly see is that they are targeting those dollar notes that are outside the banking industry.
Yeah, but Odinaka, what do you think will be the likely impact on the FX reserves then down the line?
So you can't really say, but however, generally off the top of my head, I would think it should boost liquidity, because if you have dollar in the black market trading almost at 70 naira compared to the official, and you have those kind of tax incentives, and people are able to bring in these legitimate currencies into the banking industry, so you see the improvement in the foreign currency window, and obviously just more supply. Remember that the demand is also still there in the official market.
All right, now let's get into how the market performed this week so far. And I'd like to start with the area around liquidity. I see that that's quite improved.
I can't hear you clearly. What did you say?
I said let's get into the activities of the market this week, and I'd like to start from liquidity. I see that liquidity has quite improved.
Oh yes, so liquidity is at 466 billion, increased by 106 billion from yesterday, and I think the previous day level there was an OMO maturity. Everyone is expecting the CBN to kind of float an OMO auction, but this has not happened, and that is why we saw the OPR and overnight rates kind of reduced by an average of 350 basis points to around hover around 21% levels.
All right, now we're in a new month now, and I'm trying to imagine as you look at the rest of the fourth quarter, in terms of maturities that we could expect down the line, and also coupon payments. What's your outlook for liquidity for the rest of Q4?
I would say I'm kind of bearish outlook, because when I look at the NTB maturities in November alone, we have over 1 trillion. In December again, we have over 1 trillion. And also when you look at the coupon coming in November, just mega around 23 billion. Bearing any, will I say, significant inflow in the market, I think, and if the DMO wants to refinance those borrowings, I think we are going to see tightened system liquidity and kind of a bearish market movement.
But looking into next week, though, what's your take on the yield curve activity, especially for bonds and T-bills?
For next week, as of today, market is still liquid, so you still expect those demand to continue. Like I said, market is still expecting an OMO auction, which has not happened, but as long as the liquidity remains up, you still see pockets of demand across board. Remember that we've seen market move like 65 bips from the last auction on the 31s, and also we've seen demand on the 34s and also on the 33s. The 31st just today traded around the 20.05% handle, and also on the 33s we've seen trades over around the 20.45. So as long as liquidity is still up, the buying sentiment will still be there.
All right, and thank you so much for your time today, Odinaka Linus-Nwonkokwo, the Treasury Team Member at Access Bank.